Ni hao ma. Morning, everybody. Happy Super Wednesday. Hey, there were elections yesterday. The world didn't blow up. Thank goodness, because I like this world. This is my favorite world to live on. So hopefully you're okay. Hopefully your trading's okay. Time for us to move on.com. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, nice to meet you. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Please visit TradersWay and open up a demo account if you feel like these daily webinars are helpful, if you're learning a few things. If you just even find them entertaining, swing on by, give us an opportunity to earn your business. And I would like to thank you for your loyalty and respect that you do show me every single day. Please subscribe, please like, and if you like the chart templates that I use every day, including pivot points, profiles, templates, indicators, and such, they're also available in the description. Just click on the link and you can download them totally for free. So, without further ado, let's go. So good to see y'all. Thank you for visiting the Forex.Today YouTube channel. Once again, please subscribe, please like, all that kind of stuff. So thank you. All right, so let's just go back to what we've been doing every single day. What's your job? Sit down, shut up, and get ready for the next trade. So here we are. Here's our general plan for the month. Oh my goodness. Yesterday's elections changed everything. Actually, no, they didn't. That's our trade plan for the month. We zoom in a couple of clicks. Here's the second chance, right? Remember, we did this yesterday. How to put together a monthly trade, how to put together a weekly trade, how to put together a daily trade. And look, they're making money. Woohoo! But that's what actually we planned. So that's pretty cool. So off we go, HOTTOGO. And now we've approached the projected top for the week. Well, now is when we're supposed to think about, I don't know, scaling out like a fisherman, right? Zoom in a little closer. Notice that it's quite precise. Do you think this is a random number? You think this is a random walk that euro dollar went all the way up to this price and then just stopped going up? If you don't believe it's random, if you do believe it's the pivot point that created the top, again, leading indicator, then what it tells you is that market participants are doing their jobs. They are there, they are watching these numbers, and they are trading the way that you would expect. So your choice here is typically, if you hit this pink area, it's a profit zone. So you're supposed to kind of get out, and you can kind of see that that's happened. Now you can say, well, Wayne, couldn't it go up here? Yeah, it just doesn't have to do it this week, right? It can do it next week, for example. But if you're very bullish and you believe it will go further, then you simply use price action to grab this old support. It becomes resistance, and somewhere there is your new buy entry. So now you drop into an even smaller time frame, and you can see you may have had your chance already, or you may be developing your chance. Okay, so on a 5-minute chart, you can see it came down to your roll reversal, and look at that, Pachow! Instant gratification. Bears that are going to take it down, they're going to look at this area. So if it falls sort of, let's say here, we know that bears live in this, and there truly was profit taking. If it heads back up, there's no bears. Don't worry about it. It will probably go higher as you thought. But can you see this, guys? Like, if you're a bear and you were like scalping, for example, you see how you got the projected resistance up here? We knew that on Sunday. We knew that this area, if you got up here, would be a place where bulls would start to take profit. So a cheeky little monkey scalper would be selling this 5A cross down and would probably sell this 5A cross down too, based on an inverse hammock on a 5-minute chart. It's not much, right? But it's a scalp. Yeah, and the psych level and all that. Yeah, I'll give you that, Chuck. Absolutely, Mr. Duck. Hey, Daniel, son. You know, Daniel, I was just thinking, what was it, yesterday or the day before? I was just thinking, and I think I even told my wife, I said, you know what? I miss my friend Daniel. Just out of the blue, I'm like, I miss Daniel. So I miss you, buddy. Hope everything's wonderful in paradise. So this is a real tester, guys. We're going to find out if there are bears here or not. Okay? Brazil! Man, Brazil's so awesome. You took the first one, Willie? Right on. How's it, Pharaoh? G'day from Sydney. I love Sydney. Never been there, but I'd love to. If I wasn't so busy, guys, I'd like to travel and come out and meet you guys in person. I'm just too busy. Just crazy too busy. Just can't do it. I can't. I want to. I can't. Just can't. Anyways, this is the reaction, by the way, to the elections. Okay. Not even worth your time, really, huh? So again, now that we're in this area, guys, on this 5-minute, this little box I had here, this will tell you everything, you know, because we know bears will sell there, or they'll try a triple top, right? But you notice how, like, a triple top is much less desirable if you're a bear, right? Because doesn't it tell you that you're basically alone? Like, this is the prime area to sell, right? So if it falls here, good. If it doesn't, I just don't believe there's enough bears up here to stop the bulls, okay? And of course, if there's enough bears here to sell the bulls, there were no bulls to begin with. But you see how precise these tops are and how it becomes the bottom? You know, that's straight out of the swing trading course. Not swing trading course, sorry, price action course. No, Stephen, that doesn't help because I don't have time. It's not desire, it's not money, it's not something else. I just don't have time. All right, so anyways, that's that. That looks interesting, right? This looks like a job for me. What do you think, Brent? Do you want to do Brent? People haven't asked me about Brent for a while, so why not? Let's do the energy complex. The energy complex. Well, as you probably know, I'm very disappointed because I actually want oil to go up. And we're all the way down on the monthly S1. Actually, I think we're below. No, just above the monthly S1. It's not that meaningful to me. I will bring this across. That's going to be maybe important later in the future. So that, you know, WTI is undervalued, I think, but not at a price I want to buy. And then here's your Brent, same sort of thing. Brent is actually better. If I were to buy oil, I think I'd buy Brent first, but it's below my ideal monthly pivot. So it's all very blasé. Okay. And to remind you, if this was WTI, we'd already be below the support. So, well, I'm still in this area, like, if it's going to go up, it has to go up now kind of thing. Right? You know what I'm talking about? Chuck says, value of personal time. Yeah, I don't have any. But I have this great memory getting off the plane in Singapore. I've been on the plane for 21 hours. I took a quick nap in the hotel, and all of a sudden it was like 7 o'clock in the morning, and I look outside, and I have the best view of Singapore at the top of the Ritz-Carlton, the best view of Singapore and the harbor and everything in front of me, just absolutely incredible. Then I look way down the window, and I'm like, oh my God, there's a swimming pool. So I call up Daniel. Daniel, get over here, bring your swim trunks. So it's like, I don't know, 8 o'clock in the morning. Daniel and I are walking out to the pool, and I push open the doors to get out to the pool, and boom, it's 80 degrees Fahrenheit, right? It's 30 degrees Celsius at 8 o'clock in the morning. Dang! So we're swimming in the pool, and I'm ordering like Singapore slings. How cliche can you get? But I don't know. I'm in Singapore in December. Give me a Singapore sling. Daniel are sort of like, so yeah, you can mix business with pleasure. I mean, I like being a currency trader. I like coaching currency trading. I like currency traders. So many of you guys are my friends, and then you can, as long as you live in paradise, maybe I'll come visit you. I'll never also forget, Daniel's like, dude, you only swam like a half a lap. I'm like, yeah, I'm spent. Where's my drink? Where's my Singapore sling? Garçon, garçon. Yeah. And then I made the best decision ever. I checked out of the Ritz-Carlton. It's nice, but it's not what I wanted. So I checked into Raffles, and oh my God, that was great. All right, so Brent, down, 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 down. Now, bears, like big bears, I'm just not a bear, right? So, but big bears are probably thinking about like, how cool would it be if it did this, right? I don't want that. I don't think that. I don't think anything. In fact, what I want, which is going to influence how I look at things, is that it does go up from here, and then there's a dip next month a little bit, and then it rallies up here. But we don't even have next month's pivots. I mean, it's only what, the 8th or 9th or something? 7th? 8th? 7th. No, 8th. It'd be the 8th today, right? Super Tuesday? No, 7th. So, it's way too early to talk about next month. But, even if this was rangy, I would say from the bottom to the top is the next plan. But I don't want to take that shot yet because it hasn't proved to me that I'm going to make money. Right? It has to prove to you first that you want to make money. It's sort of like, does everybody know, like, when the real estate market has gone up and up and up and up and up, and prices are like way up here? We know that eventually when it comes down, if you're buying up here in real estate, eventually, when there's a recession, it comes down, right? And everyone that paid way too much at interest rates that were way too expensive, they get slaughtered, right? Because they're pigs, right? They're like, why did you buy this house? You don't have enough money. You're over leveraged. You're way late in the cycle. And you're like, yeah, but all my buddies are getting filthy, stinking rich. So now that it's way late in the cycle, I decided I want to get filthy, stinking rich too. Well, you're like, well, you clearly don't know what you're doing, right? So when do you buy? Do you buy low or do you buy high in the real estate market? Rob says he's waiting for it's not going to fall until 2025, in my opinion, Rob. Maybe it'll start 2024, but it's going to go up another 6 years, in my opinion. See, wow, look at that. I'm opinionated. And then I could probably back it up with some facts and some stats. And I can be very, very convincing. But that's my job, right? I'm an analyst, I'm a trader, I'm an investor, and I'm a financier, so that's my job. Sydney's dropping at the moment. Yeah, but they're in that part of the cycle, right? Australia is supposed to be exporting stuff. They're not exporting stuff. Okay? Besides, Australia was so overbought because there was nothing else for the Australians to do with their money. So they're just in a different cycle. Remember, all these things are generally a good thing. If you looked at the market, let's say completely from the outside, like let's say I come in and I analyze the Australian market over a 100-year period, I'd just say, oh, well, this was actually expected and actually needed. And right? But I'm not losing money on houses. But I can look at it and say, well, we were at that period. Okay? Okay? So anyways, what you don't buy just simply low. You buy when you have evidence that either inventories are starting to fall or occupancy rate is a better one. Occupancy rate starts to rise back toward the long-term average. It's not only that you buy low, because you could buy low and just have it go lower, right? You might have thought this was low, and then you might have thought this was low, and this is low, and this was low, and this was low, right? What is low? 382? 50%? 618? Like which fib do you buy? 786? If this was a Fibonacci, let's say, you don't buy it just because it's a 50% or just because it's a 618, but because it's bounced and started to recover off of the 618, and that then tells you, oh, we're going to 1382. You see what I mean? Oops. There we go, right? So whether it's real estate or the stock market or the bond market or natural gas, the same logic is true. You don't just buy because of, let's say, a Fibonacci retracement, right? You buy based on where you are in the cycle, especially now we're talking about big cycles, right? Okay, so when somebody tells me, oh, the stock market, the housing market's going to crash, I'm like, really? Why? I heard it on Fox News. Yeah, so why? That'd be a great question to ask. Great, why? Tell me why. Why? Because interest rates are too low? No, the people will say, no, because interest rates are rising. Why? Because like the Fed funds rate is at 2-ish percent, 2.5%. If you go back, let's say the last 10 times the real estate market crashed, what was the Fed funds rate? Was it greater than 3%? Yes, every time. Was it greater than 4%? Yes, every time. Was it greater than 5%? Yes, every frickin' time. So if we're stuck right now between 2 and 3 and someone's telling you the real estate market's going to crash because the Fed's raising interest rates, and you're like, why? Jacking them up to what, 2.5%? Like, dude, we're so far away from that. This is my first argument. Now, I don't know if I'm right. You don't know if I'm right. I don't know if you're right. But at least I can back it up. And I'll argue something. I'm like, there's no way. Right? So Rob's like, 2025 is perfect. Fed funds rate is good. Well, it has to make sense. When is real estate too expensive to buy because the cost of money is too high? So, like, for example, if the real estate market goes up 5% and the Fed funds rate is at 5%, you can't make any money. Well, that would be a good indicator. Okay? Right? Look at Alan, right? Alan's like, he began his real estate career, mortgages were 17%. Yeah. Right? So Alan, people like, credible people on TV say things like, wow, at these rates, the market's going to crash. Like, who the hell is this moron? This is the best time in history to, right? But anyways, do you have an opinion on where the Canadian? Yeah, hey dear, fly me out to wherever you are. Pay me $100,000, and we'll have dinner, and I'll tell you. But I'm worth it, trust me. All right. So, anyways, yeah, check this out. Nat gas, holy smokes. Now, if we drop this into a 4-hour, check this out, my swing trading brethren and brothers and sisters. Check this out. Look at the monthly swing on nat gas this month. Chow! Look at that gap there. There must be something. There must be something off. This must be a rollover or something. Who knows? But whatever. Long story short, this is projected top. Okay. Which, if we were going to like backfill our own nonsense, we would say, well, oil's going to go up because nat gas has to come down. Now, nat gas doesn't have to do anything, but I sure want oil to go up. So we'll let Brent lead the way. And so a WTI trade plan would be, have WTI go above some level of resistance, and that's for you to figure out. And then maybe either a double bottom or a higher low puts us long. Okay? That's what I think. Renko says, housing bubbles over the world. Well, a lot of these bubbles are created because there was nowhere else for someone to park their money. And that's sort of the argument against having the Fed come in and save things, right? But it's really interesting, like when the stock market crashed, my friend cashed out of like equities and stuff, and he bought 7 houses. Cash, just boom, right? So he's got no mortgages. He's got 7 or 8 houses. Fixed them all up, like ripped them down to the studs because he can get contractors for super cheap. People were willing to come out just basically, with the cost of materials, labor was basically free. To give you a sense, the cost of doing things now has doubled and is still going up. So he hired everybody and everything was half price, new roofs and new walls and new electrical, new plumbing, right? But at some point, you're supposed to get back into the stock market. And the problem is retail traders just didn't do it. So at the time I said, look, I know what you're doing. And it's good to sit on this, for many years. I said, but why don't you buy the stock market for the next 2 years and then cash out again and start buying real estate? He's like, well, why would I do that? I said, well, the stock market's probably going to double, right? It's probably going to double. This was back when we were at 8,000, 9,000, 10,000. So the stock market's going to go up, let's say 50% to 100%. And your house is going to go up 10%. Right? So therein lies the problem. Now, he's obviously a little more sophisticated than the average Joe, a little bit more money than the average Joe. But what happened in this recent decline, well, 10 years ago, the decline, 2007 crash, is it wiped out 50% of many retail Forex traders' net worth, and then they never got back in. So what do they do with their money? Well, in many cases around the world, they put it into real estate. So now you have this problem of, now there's a real estate bubble. Yeah, well, there was nothing else to do. Now, you could have bought the stock market, and I begged people day after day after day after day. I begged people to buy the stock market. And I called it a free market rally. The Fed was pumping in trillions of dollars to increase asset prices. Do you remember like TARP, Toxic Asset Relief Program? I mean, all these things were designed to make the stock market go up. So why would you not buy the stock market? Right? And then when the Fed's like, yeah, we're going to start to taper, why didn't you sell the bond market? I mean, it's just like, it's so straightforward. the Fed is propping up the bond market. So now that they're no longer going to prop up the bond market's going to fall. So you short the bond market, right? Do you remember when Bill Gross came out and he says, this is like a short of a lifetime? Right? Remember when he finally came out? Yeah, true, Alan. Well, to me, the biggest thing is the inverted yield curve and where we are in the business cycle. So to start learning about tranches and, all that kind of stuff, I don't think we need that kind of level of detail. But I think it would be a good idea for people to understand business cycles, real estate cycles, yield curve analysis, that kind of stuff, right? Anyways. Are you likely $60 a barrel? Let's go back and look at that because, the problem is I want something too much, and I understand it. I understand that, let's do it. I think I have it here. I want oil to go up, and specifically I want WTI to go up, right? And it's not doing what I want it to do, so I don't want to look at it anymore. Is really what I'm doing. I'm burying my head, Alex, so, okay? Because what I don't want to do is go shopping while I'm hungry. I don't want to go to the grocery store while I'm hungry because I'm going to find a reason to buy it. And I don't want to find a reason. Okay? So what I said to you guys, I don't know if it was yesterday or the day before or something, but I said, look, WTI has to prove to me that it's going up. And well, right now it's just sell, 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 sell. So, see, I can convince myself, for example, let's say it does this. I'll say, oh my God, there we go. I'm going to buy the higher low, but then it does this. Because then it just makes this move on a daily and then drops. So I don't want to talk myself into it. It has to talk me into the trade. So I may have to let this go now like a lot. And then buy a dip. Okay. And if I were to take a shot, the Brent would be a better trade. Okay. Yeah. So this week's, M1 is 60. Well, we're at 63 now. So, let's talk about it then, right? You know what I mean? Matthew, no, it's not me. It's my opinion. So if you got a $10 million project and you want my opinion on interest rates over the period of time, sure. Let's talk, bro. Right? Plus, if I don't have time, mostly because I'm in grad school, then I can give you my time, but then grad school has to suffer, so you might as well pay for my grad school. I don't know. All right, so we have plan A and plan B here. This we already did Euro. But do you remember doing this exercise? I have plan A, plan B. Yeah, Mr. Highvolt, I can help you with that. Okay. What is the largest drawdown you're willing to take for an entire month, Mr. Highvolt? So you have a track record, let's say that goes back 3 years, maybe 5 years. And on that track record, it just shows percentage-wise how much your account made or lost for that month. So, right? Every month, January, February, March, April, May, June, July, August, right? what is the worst month you want on that report? Remember, this report is like getting a tattoo. It's going to stay with you a very long time. So every one matters. Okay? So what's the worst month you want on your 3 or 4 or 5 year track record? Minus how many, what percent? No, I'm not asking you what you were told. I don't care what some idiot told you. I'm now speaking. So let's do it. What is your worst month, Mr. High Volt? And by the way, like 3% on one trade is so unbelievably retarded. That's why I can attack whatever you were told. Whoever's told you that is a moron, in my opinion. With all due respect, you guys ever see Talladega Nights? He's like, I said with all due respect. He's like, well, that doesn't give you a license to say anything. He's like, sure, it does. Look it up. It's in the Geneva Convention. Well, there you go. Okay, Mr. High Volt, but it's still, look, I'm asking you, if you had to track the results of every month for month after 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 month, and if you had a good track record of success, that you could make millions of dollars a year. So every month matters. Because if you have one terrible month, you're worth nothing. You're worthless to an investor. So it's critical you have good, well, let's say decent returns on the long run and no major problems along the way. That's what I'm getting at. So, for example, let me answer this differently, Mr. High Volt. The average professional Forex trader in the United States that's licensed and registered, that's trading other people's money, the best, make 2% per month. That's those are their returns. 2%, 2%, 2%, 2%, 2% per month. Per month. But they're managing hundreds of millions of dollars, and they're making filthy, stinking rich kind of money. And they're making filthy, stinking rich kind of money because they earn 2% month after month after month after month. So with that in mind, how do you like to lose 2% on one trade? This is why I know whoever gave you the advice is a moron. You lose 2% on one trade, you're freaking fired. You're fired. Like, no one's going to invest in you. You lost 2% in one trade, you're fired. Push you right out the window. Whoa, right? So let's say your worst month, Mr. High Volt. Let's say your worst month is minus 2%. Because if a good month is plus 2, then your worst month shouldn't be like minus 12 or minus 20. You understand? If you're managing a $100 million fund and you're like, well, I had a bad month, I lost $20 million. They're like, what the? Okay? And by the way, if you lose 20%, what return do you need to make to get back to where you were? And it's significantly more than 20%, but you're losing 20% in a month, so how could you be good enough to make 30% a month, especially when you're only trying to make 2% a month? So, like, it just, nothing works out in the amateur thinking, right? So what I'm asking you to do now is say, well, if, let's say 5%, let's just say 5%. If 5% was the worst month you could even dream of, where everything you touch doesn't turn to gold, it turns to lead. So everything you do for 1 month sucks. And it's the worst month you've had in 5 years is the minus 5%. How bad, how many trades do you make in a month? And what if 75% of them were losers? What if 100% of them were losers? Like, you're like, well, Wayne, I can never be that bad. And I'm like, I know, I'm not saying you would be. But let's just play a game. If you make 50 trades a month and 50 trades were losers, right? And that added up to 5%, then what lot size and stop loss are you using? That's where you want to get. And you'll say, well, Wayne, then I'm only making 22 cents a month profit because I'm not using enough leverage. No. Your problem isn't leverage. The problem is you're poor. And it's nothing to be ashamed of, although there's no dignity in poverty, right? What you need is assets under management. It's just like, don't get things twisted around. So if your problem is you're a fantastic trader and you never hit minus 5%, and every month you seem to be making 3 or 4 or 5% quite consistently, and you have very few drawdowns, and you can do this over long periods of time, oh my God, well then you will have no problem attracting assets. People will invest into you, and now your whole assets under management problem has gone away. Yeah, all right, but see what I mean, Mr. High Volt? Like, don't worry about that. What you want to do is lower your risk as much as possible. And focus on consistent returns, low drawdowns on a long period of time, like 2 or 3% return per month. But you know what? Like, compared to professional portfolio managers, that's fantastic returns. Like, holy crap, if you could do that. And people are going to say, well, this guy gets 3% a month because he's using leverage. If you do risk-adjusted returns, it'll be much less. I mean, like 3% a month, you're like a rock star. And for some reason, when amateurs come into this game, they're like, I need to make 25% a month. And what happens to them? They're cliches. They're gone. Like, they're not going to be here in 5 years. Why? Because they have one bad month, whether it's this month or 10 months from now, and it wipes them out. So the ones that are around 5 to 10 years, they have very low lot sizes. And dude, if you're doing 3 or 4% a month, you're double the best professional traders in the world. So you see what I mean? Like, you got to dumb it down and focus way out there in time. What are you going to be like if you have this track record of success for 5 years? And you could show it to somebody. They have a different problem. They have so much money they don't know what to do with. And they want to invest. I know tons of people like this. I know someone that has a full-time employee follow him around because he loses $250 million a year doing this crap. So that his family has a full-time accountant following him just to help him not lose money so fast. And he's like, wait, what do I do? I need help. Well, stop losing money, right? Like, there's people out there that can lose $200 million a year, and it's nothing. So if you can show someone that then can go through, put their little spectacle on and go through and look at the numbers and say, wow, these are really decent returns. They're very consistent. They're low drawdowns. Risk-adjusted returns are acceptable. This is what I've been looking for because I have this problem. I have so much money. Will you help me manage it? And you'll say, yeah, I'll help you with that. Okay? That's what you want to get to, but you got to think about that. It will take you 5 years. It might take you 10 years. But like I said, when I signed up for my 4-year program at Harvard, they're like, A, you're going to have to work your ass off. B, it's going to cost you a ton of money. And C, it's 4 years of your life. What if I said, well, you know what? I just want my degree. Can I have it in 6 months? Come on, can we speed this up? Instead, I signed up and I'm an A student. I'm going to graduate with honors on the dean's list because I take it even more serious than that. Not just getting into the school, not just graduating, being the smartest kid in the class. But that's how you need to treat Forex. 4 years from now, you should say, I'm the smartest kid on the class. I'm on the dean's list. I'm the honor student. I'm the one that goes to the extra effort way beyond everyone else, and everyone else is awesome. I'm just this much more awesome. So choose me and not them. Invest into me and not them. And they're like, you know what? I like this guy. Check. But that's the attitude, right? So that's a really long-winded answer to your question, Mr. High Volt. Lower your leverage. Lower your lot size. And focus on the long term. Grow that trade account very slowly. And don't worry about making money. Look, once you get some basic skills, making money is not your problem. I mean, look, you buy a dip. What's the problem? Right? There's no problem. Making money shouldn't be your biggest challenge. And if making money is your biggest challenge, then cut your lot size and cut your leverage. Maybe stop trading altogether until that's not your problem. But making money shouldn't be the problem. Your concern every day is drawdowns and volatility. These are bad. That's your concern. Making money, you should be shocked if you put money in the market. You should be very disappointed you didn't make a profit. Why did you pull the trigger if you were not certain? You see what I mean? Like, so you'll get beyond that. Don't worry about it. You don't have to be a rocket surgeon, right? You see what I mean? No. So, like, Mr. High Volt, you should be trading mini lots. I think I used to have a rule, and I can't remember now, but I can only trade one mini lot for every $100,000 in cash. And a lot of you guys would say, $100,000 in cash, man, I'd be trading like 5 standard lots. And I'm like, yeah, I'd be trading one mini lot. You see what I mean? So anyways, Mr. High Volt, whoever told you you should only risk somewhere between 2 and 3% per trade, I'm telling you, you should risk 2 to 3% per month. So, like, whoever gave you that advice, you probably have 10 times too much leverage, in my opinion. Okay? In my humble opinion. You want to be doing this 15 or 20 years from today? Lower your risk, lower your lot size, and then get really freaking good at what you do. You're awesome at technical analysis. You're amazing at fundamental analysis. And this psychology stuff, you're skilled, you're solid, you're patient, you're disciplined, you're focused. And you're in love with what you do. You're passionate about doing it. And nobody can get in your way. Yeah, and then money, gee whiz. There's so much money out there, it's sick. Ugh. A friend of mine just did a business deal last month. He made $60 million. I'm like, what? And then he went on and made a whole bunch more because it was just nothing for him. It was amazing. And he's like, yeah, well, that was last week. Well, this week I did this and this and this. And I'm like, so you're like more like $70 million for the month? And he was like, I don't know. You know, like, the people have that kind of money. You're like, you made that this month? Yeah, whatever, yeah. I'm like, damn, that's a lot of money. I saw one guy, this was about 3 years ago. He's like, I'm having trouble with my Forex account. I'm like, well, send me your results. Just send me your statement. So he sends me the statement. I'm like, you lost $20 million in a day. Right? Yeah. Like that's just one day. Yeah. Like, this is horrible. Who's making these decisions? Like, you can see it. It was falling, falling, falling. It's just buying, buying, losing, losing, losing. I'm like, oh my God, that's a lot of money. I'm like, yeah, so what should we do? I'm like, what should you do? Shoot the trader. Like, this guy's making, I'm looking at, he keeps buying at support. Sorry, buying at resistance, selling at support, and all this kind of stuff. I'm like, wait, no. Whatever, you know what I mean. Anyways, it was horrible. I'm like, you just need to get that guy, shoot that guy and get a new trader, right? So you can be the hero, guys. Now, it might take you a long time. Do you want to play in the big leagues? Well, look, realize you're T-ball. I don't know if you're American, if you know baseball and stuff. But when you're like a 5-year-old, you go out to the baseball diamonds, and they have this little stand made out of rubber, and it holds the ball. And the little kid goes out there, and his helmet is twice the size of his body, and he's got this bat, and boom, and you just hit it, and you run, you know. And then you get a little bit better, and then there's slow pitch, and then you get a little bit better, and a little bit bigger, and a little bit taller. And you do that for a few years, and then they start, you know, about high school. Now it's fast pitch, and you're actually playing baseball, right? And then you get going and going and better. So a friend of mine was a professional baseball player, and he said in high school, right, he went all 4 years, and only one batter ever hit his ball. Only one guy. Or was it a home run? Maybe it was like one home run against him in 4 years. He broke the bat of one of the kids' bats. So then he went and he was on the Olympic team. Okay? The youngest guy to ever play on the Olympic team, right? This guy is good. But it takes years and years and years to get to the point where you're in the big leagues earning millions of dollars. Look at it that way, where your helmet is wider than your shoulders because you're so small. And the bat you carry is super heavy. And you're going to need to take this very, very serious for 5, 10, 15, 20, 30 years. But one day, you'll get to the big leagues. You'll get there. You'll get there. You'll get to the big leagues if you take my advice. And that is to be small, right? Stay small, stay humble, focus on the long term, and never risk money you can afford to lose, because you can never afford to lose money. And I've been saying this for 15 years. The number one goal is not to lose money. Okay? Your goal is to still be doing this 5 years from now. And if you make that your number one goal, you'll make it. You'll make it. I believe in you. If you can make that your number one goal, I believe in you. I believe you will make it. Okay? Why do you guys get me going? Why do you get me going? I think some of you guys like it. You're like, go poke the tiger. Watch how angry he gets. Go poke him. Anyways, let's start here. Okay. So I said yesterday, if the Republicans lose control of the House and the Senate, okay, then the yen would get strong, the Swissy would get strong, the dollar would get strong. Okay? Right on it, AJ. Yeah, I don't know if you get honest advice like this somewhere else. I don't think you'll ever hear a broker tell you to trade smaller lot sizes. Most will give you like, trade, 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 go, 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 because that's how they make money. Trader's Way wants you to succeed on the long run so you can be a client for years and years and years and years and years and years. And I think that's refreshing. Okay? Thank you, guys. I do appreciate it. I really do. This is my favorite hour of the day. All right. So anyways, I said yesterday, if Congress and the Senate, if control of the Congress and Senate are taken away from the Republicans, then we have this uncertainty. And in fact, what it would do is they would be in a situation where they could repeal the work the Republicans have done already. And then that really creates this uncertainty. Like, are they going to bring Obamacare back? Are they going to like kill these deals that Trump has renegotiated? So bring NAFTA back? Like, does this reset everything? Like, nobody knows what that would mean. And that's bad. It's not that the Democrats are bad. It's that the uncertainty is bad. So if they had taken control of both the House and the Senate, then I said the dollar would gain strength, the yen would gain strength, and the Swiss franc would gain strength. Okay? So what happened was, as Rob said, okay, control of the House went to the Democrats, but the Senate is still controlled by the Republicans. So what does that mean? Well, it means, first of all, and I did mention this yesterday, and that situation means nothing's going to get done for the next 2 years. The Democrats, even just out of spite, are going to block everything the Republicans want to do. And that's that. So nothing now is going to happen for the next 2 years. Nothing. No new trade deals, no new laws, no new appointments, no nothing. Absolutely nothing's going to happen for 2 years. But what does that also mean? Nothing's going to change for the next 2 years. Because then if the Democrats try to, let's say, kill the New Deal with Canada and Mexico and bring back NAFTA, Senate kills that. See? So nothing in the next 2 years will change. Now, that's not necessarily progress, but what does it mean? Certainty. And what did I say would happen in certainty? Yen would weaken, Swissy would weaken, dollar would weaken. Huh? And how many times over the last 5 days, let's say, have you heard experts say, well, you can't predict this, or, oh, this is uncertain, or, whoa, no, or what, whatever. I mean, right? This seems so obscure. Like, oh, who knows? Nobody knows. I mean, what do you mean nobody knows? Or there's the other people are like, oh, the stock market's going to crash. Like, well, under what circumstances and why? Right? Like, this is why I don't watch TV anymore. None of it makes sense. These guys that make millions of dollars, tens of millions of dollars a year, they really don't know what they're doing. Like, you could be a better trader than them. I honestly believe that. There's a next generation of money managers, aka you, and I think you'll be much more sophisticated than they are. Because we could talk about it really casually in real simple terms yesterday, and I'll say, this is what's going to happen under this circumstance. It comes out and like it happened exactly like I said. Why? Because I'm a genius? Well, maybe. Because I'm a supermodel? I was. No, because it's logical. It's not magic or voodoo science, right? So anyways, check this out. Status quo is a good thing. Look at Euro yen went up. Aussie yen went up. Kiwi yen went up. CAD yen went up. USD yen flat. Why? Why did this not like skyrocket like all these other ones? Because I said both the yen and the dollar would weaken. So it didn't move at all, which only proves my point. Only proves my point. That we could talk about this 1, 2, and 3 days in advance. And if this happens, then that's how you're going to make money. You understand that? Like, that's what I told you and taught you yesterday. This is how you make money. And I know 95% of you ignore me. Like, yeah. Why did it weaken? Because it's a funding currency. So in a risk-on scenario, you fund your investments through Japanese yen. If you don't understand that, then it will take, we will take time together. We will work. You could also go to FX Bootcamp, take courses. We're even adding new courses right now. So there are ways for you to learn this, but it's just fundamental analysis. Okay, let's just put it that way. Okay. Right? Yeah, crypto trading says, I remember dollar, yen, and Swissy, right? Like, I don't even know. I haven't even looked at Swissy today. So I don't know, honestly. Pound Swissy. Okay, Swissy wasn't that good. Okay. My favorites are dollar and yen, obviously, right? So Swissy, not so much. Let's see. Yeah. So pound dollar went up, euro dollar went up, USD CAD. This is my frustrating one, right? I've been wanting this to move. Okay. But Canadian dollar. So remember, oil's been falling. So CAD should be weak, but CAD is stronger than the US dollar. And it's been falling since the election, right? Over the last 12 hours. 444. So for 12 hours, it's been falling, which is right at the election. So even pathetic Canadian dollar kicking butt compared to the US dollar. So anyways, I hope you appreciate that these big picture stuff, I'm trying to teach you how to make money. Now, technical analysis, that's easy. That's just picking the price. The money is made when you know how to make money, when you should be a buyer or should be a seller, right? Like I said in the real estate market, it's not that you're buying a house for cheap. You're buying a house for cheap after the market is stabilized and occupancy rates are just starting to rise back up, which means you've hit a bottom and now you're a buyer. And you're like, wow, but now you need to know things like that. Well, I'm taking a class at Harvard on real estate development, so you should go to Harvard. You'd love it. So anyways, that's the big picture stuff is the money maker, not scalping here, 12 pips here, 8 pips there. Imagine, like these big successful billionaire traders, they're not penny pickers. They're not picking up pennies in front of steamrollers. They have big ideas. What is the economy going to do for the next 5 years? And based on that, how can we make money? That's the logic where I want to get you. Okay? So like all my meta traders. By the way, meta traders, do you want to meet today? Where's my portfolio managers? We haven't met forever. But I want to meet today. I've been so swamped with stuff. I finally cleared things up. I finally got a decent amount of sleep. I'll have to send out an email. We need to meet. I should have sent one out last night. I was just too tired. Anyways, a portfolio manager has a responsibility and a duty. They know what their bias is, and they know what currency pair they're trading. It's as clear as day. There would be, like, for example, as a portfolio manager, when you wake up in the morning, you're looking for opportunities to buy euro yen. Never sell euro yen, never looking at euro dollar, never looking at euro Swissy, never looking at pound, never looking at Aussie. Buying at support. And it's similar to, let's say, more of a strategist position than a portfolio manager. A strategist would come in and say, well, because of the election results, the stock market is going to continue to go up, although, albeit, let's say, modestly, will continue to go up for the next 2 years. And be able to explain why. That's right, Brady. Okay? And so what you need to do is bring sort of that strategist idea to your trading. What is the big picture? What is the context of our investment environment now? And then how can you make money from that? Because then it protects you from situations like October where it fell. It'll protect you because at some point it'll take you out of the market if you're a bull. And at some point you're looking for things like double bottoms. Not that complicated. And then you get back into the market. Okay. Okay. So anyways, going back, I want to go back to the yen version. We were here, right? So remember we had about 5 double bottoms 2 weeks ago. Was it 5? That's not one. But look at our trade plan for the month, guys. We did this here together, you and me. Okay? What is that, 350 pips now? And remember, when you put your trade plans together, there's like 1 opportunity, 2 opportunities, 3 opportunities, 4 opportunities to get in. Okay. Here's one. I have to go out one more. Oh, you guys look. Remember me doing this? 1, double bottom, which is from here to here. 2, higher high, which is from here to here. 3, higher low. And then people heckle me and they're like, why don't you just pull the trigger and show me? Why don't you just show me? Like, look, I wrote it out. Okay. Now look where we are. I mean, that's pretty specific, isn't it? It's not that easy to write these things. It probably took me, what, 4 minutes to write it there. So here's the double bottom. Here's the higher high. Here's the higher low. And remember, I went through it and I talked. I told the story about battle stations. And you're sleeping in your hammock in the Navy, going through drills and exercises. So this must have been a 15-minute discussion. Okay, right? That's cool, isn't it? Bear in mind, we also went through this whole period in here of waiting and waiting and waiting. And that was the hard part. And it's always the hard part. Okay? It's always the hard part. It's the patience and discipline to wait is always the difficult part. Well, it has to do with how well they're respected. So the question is, how do you know if the weekly is in control or the monthly, right? Yes, look at this. Buy. Let me see if I can get a better example. Kiwi yen, maybe? I mean, it comes down to, monthly should always be in control. Okay, monthly should always be in control. It's the basis of a trade plan, right? So do you remember? Okay, double bottom. This is something we predicted. Okay, this one failed, right? Double bottom. Oops. Okay, and there's your hammock, 1, 2, 3, reversal. There's multiple versions here. Okay, then here's the roll reversal. You see we weren't even here yet, but obviously that worked. So you have to ask yourself, and let's say kind of in this point here, the first day of the month. If it goes up from here, so let me mark this with a new X. On this day, on that hour, you say to yourself, if it goes up from here, then is it bullish or bearish? I do like to cook. Okay. Mr. Highvolt, why don't you visit tradersway.com, download MT4. Also in the description of this webinar, there's a link to my MT4 charts and profiles and indicators and templates. Download those for free and then compare what you've been trading with to what this is, right? What I trade with. Just watch them both for the next couple of months and see which one feels more comfortable after a couple of months. Okay? Just don't judge it. Just do it. Just observe. Come to my webinars every day and then just see what you like better. Okay, Mr. Highvolt? All right, so going back to this, if it goes up here from here, we know based on just simple swing trading. Now, look, here's an assumption, caveat here. I'm assuming you know how to swing trade. If you don't know how to swing trade, you need to take the swing trading course. That's pretty straightforward. So a swing trader would see this and say, oh, okay, if this works, if this continues, because it had been before, off of a double bottom. So all of this is pretty straightforward. But based on this, who's in control? Well, the first answer is monthly. And we know this is the target. Okay? The lower part is the conservative target. The upper part is the aggressive target. Okay? So that's where we're going. That answers the first question. Okay? And so I was asked, how do you know who's in control, the monthly or the weekly? Well, it always starts there. You have to know where you're going before you start hiking in through the woods. Right? You understand? Wayne likes butter chicken. Hey, yeah, happy Diwali, everybody. Thank you for the butter chicken idea. I should make some butter chicken. Love butter chicken. Anyways, happy Diwali. So anyways, that's where we're going. You shouldn't start walking through the forest until you have an idea of where your destination is, okay? Otherwise, you're going to get lost. And then above and beyond that, you want to see respective weeklies. So you can see we're not even really playing any of the weeklies this week. So I would say this is a monthly move, okay? This is our aggressive target for the month, 77,000. And it is, even though we're not using the weekly, it's a weekly profit zone. So if I was a Kiwi yen guy and I was worried about this, I would take profit. Okay. But we also talked back in here, the double bottom, right? That you could possibly be in till the end of the year. We don't know, and nothing suggests on the chart. Do you guys remember having this conversation, or did I just do it with the swing trading group? But I do remember saying something to that effect where, like, look, nothing on this chart says this. But fundamentally, it's possible that if this double bottom holds, you can be in the trade till the end of the year. That's food for thought, because now that we're up So what? The other pair was up 350 pips, right? What is this now? 450 pips. Now is the real challenge. And this is, I don't have an answer for this. This is really between, just you. Do you take profit here or not? Well, I don't think you can go poor taking profit. This does represent a lot of risk. The top of the month of November and the top of this particular week, and it's only Wednesday. So what do you do if you were planning for this to go up for the rest of the month? The rest of the year. And here it is, the 8th of the month on a Wednesday, and you're topping out both weekly and monthly targets. Well, you're doing something very, 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 very right. But if you were an analyst now and not a strategist, an analyst just sees support and resistance and risk. They're not thinking till the end of the year. They're just looking at this. What would that analyst tell you? That technical analyst, what would they tell you about risk here? Right? How about like the dealer's card is a king? What do you do based on your cards? Doesn't even matter what your cards are, right? What's the likelihood that the dealer puts up another high card? It's a big difference if the dealer's showing a 4, right? And you have a Jack 10, right? And the dealer has a 4. You make a decision about risk, about reward. But if the dealer has a king and you have a Jack 10, there's a lot of cards that could beat you, even though you have a pretty okay hand. It changes things. So it's just risk and reward, right? So if you were just an analyst and you're not thinking about fundamentals at all, you're not thinking about seasonality, you're not thinking about anything, all you see is the big X is a monthly take profit zone. The little x is a weekly take profit zone. What do you do? And that's all you see. What would you coach somebody else to do? If hope wasn't a strategy and praying didn't work, what would you do? Take back and get back in later if the opportunity arises? Okay, maybe. I want you to think about that. So thank you for being on my team. Download my templates in the description if you want my MT4 setup, everything. Hundreds and hundreds of charts. Please give it a like. I'd appreciate that, right? And please subscribe if you want YouTube to alert you when I start my webinars and invite you to join my live streams. Okay. So thank you again for the loyalty and respect you show me every day. I appreciate your professionalism and the effort that you give. Peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow, and I will see you Friday, and I will see you on Monday, and I'll see you on Tuesday, and I'll see you on Wednesday, and I'll see you on... Take care.